Hey, I just wanted to hop on real quick and cover five main pointers for self employed buyers. So I'm going to be really quick. I'm just getting over the flu and strep throat. So I'll try to be real quick. So, how do self employed buyers get approved for new construction in Texas? I have five main points I want to address with that. The first one to know is that pre approval isn't final approval. And what I mean by that is a lot of times when a pre approval is issued, people think that that's the end all be all, meaning that nothing else needs to be done. I've been pre approved. This is great news. Yes, it's great news because the pre approval does allow you to take that piece of paper and attach it to any contract that you want to go and put a house under contract with. That's the only purpose of that pre approval letter. Yes, when they speak to you, they're going to ask you some questions, but self employed buyers are different from W 2 buyers and 1099 in that they have to configure their income or look at the income very differently. That's why I only work with lenders that specifically specify with income of the self-employed buyer. I used to work with a lot of truck drivers, and every lender that I would work with calculated their income differently. So when it comes to self-employed buyers, it's not that they don't make enough money; they make plenty of money. They just a lot of them have very good accountants that write everything off. And once you write everything off and you want to go and buy a house, now you're looking to doctor or amend your tax returns, and that can draw up a lot of red flags. And so you really don't want to be going back and forth amending tax returns, drawing red flags to yourself with the IRS, and also drawing up red flags with the lender because they're going to see that, wait, before they didn't make enough money. Now, is it because they are applying for a house? They want to show that they make income. So you have to be very careful with that. That's why the best thing to do is to work with lenders that understand self employed buyers' income. I work with builders all the time. They say, oh, our lenders, we have three of them. They know what to do. And of course, once the buyer goes with the builder's lender, I let them go ahead and do it. And I explain to my buyer, it's only so that we can get the incentives because if we don't at least let their lender, I hate to use the word fail, but if we don't at least let their lender try to see if they can get it done, then they won't give us those incentives that you would like. So they go ahead and let the lender try to process them. This last week, I just had a closing with a self employed buyer. And sure enough, they went through three lenders, and three lenders cannot get them approved. But the lender that I use, because I already know the drill, that they were not going to be able to use the actual income that they make because they wrote everything off. But they were able to get approved through my lender and close happily and get the keys to their home. So just keep that in mind. The second bullet point I want to discuss is called Builders Don't Approve Loans. I shouldn't say called again. Remember, getting over the flu here. But builders don't approve loans. And that's true. You go to the builder, you talk to the builder sales rep. The builders have at least two to three home mortgage companies on record over there. They'll give you each one of their email addresses and their business card. They're going to say, give them a call or give one of them a call and see if they can get you approved. And then once they get you approved, they're going to send us over a pre-approval letter and voila, they're going to take that pre-approval letter and they'll attach it to whichever home you said you liked. And that's the one they'll do the contract on and use that pre-approval letter with. The other thing about that pre-approval letter is, unfortunately, I had someone call me 9 days before they were to close. And I can't believe they're still doing this in this day and age. And they were told that they did not have a home loan. It happens to be one of my clients' son who had grown up. married very young, had a small baby, and they wanted to purchase a home. And they were told at the last moment that they couldn't use the wife's income, which is crazy because they should have told them that from the very beginning so that they could have structured the loan a different way. So that means that the pre-approval letter was invalid. It really wasn't valid. He went on a contract. He spent money for an appraisal. They bought a survey. They paid for inspections, put down earnest money, all of these things that they did because they were told that they had a loan, only to hear 9 days later that, or 9 days before the closing, they don't have a loan. So we spoke, and I called some of my lender friends up and asked them to give him a call to see if it was something that they can help work out on that end so that they can end up closing. And fortunately, I got a phone call from him 2 days ago stating that everything worked out and he was very grateful and appreciative, and they're going to be moving into their new home. So you just have to be very careful with the lenders you pick and select because not all lenders are the same. Number three, documentation and stability matters. Now, this one is so important because lenders, of course, they're going to look at the history, even if it's a business. How long have you been in business? Of course, they're going to look at your credibility. They're going to look at your credit. They're also going to be looking at documentations. They're going to be asking you for certain things. When it's self-employed, what they typically going to be looking for is, say you have a business, a viable business that's registered with the state. What they're going to want to see is that it's active. It can't be inactive. I'm guilty of that myself. My business, sometimes I forget to record or to file my reports because the type of business that I do, I don't charge taxes. But if I'm late with that filing, which is every year on March 15th, they fine you $50. Well, I had a client that was had a business that was in another, I was going to say country, another state, and they were fining that person $200 for each time, and so they had to pay a hefty fine to get that business inactive, even though everything else checked out perfectly. So documentation is going to be very important. And if you self-employed again, not that you can't get the loan, you want to make sure that your business is active and is listed on the site that way because the lender will check to see, hey, is this company active? A lot of times the company doesn't have to have that status active to still be operating. But when you're trying to get a loan, that's what you're going to have to do. It's going to have to be listed as active. And number four, full underwriting often happens after contract. Oh, I've written so much on this subject that it'll make your head spin. And I was trying to find out the best way to talk about this one. Now, once the contract is submitted with the pre-approval letter, what generally happens is underwriting starts. The buyer thinks that in the beginning, when they give up a lot of documentation to get the pre-approval letter, that was enough and that's pretty much the end of it. But it's not. So once the loan officer receives the contract, and of course, along with the pre-approval letter, now they go to work. So the underwriter is going to have it because what they're going to try and do now is what is called a conditional loan approval. It's a loan that's approved with conditions, meaning we're going to give you the loan, but here's our list of demands or here's our list of conditions that you must meet. They're like requirements in order for us to give you this loan. And you're probably saying, well, what are conditions? Well, conditions can be they need an appraisal. Of course, they need a title commitment. They need a survey. They may need a copy of your business documents to show that you own the business and that you actually are registered it with the Secretary of State. So Once it goes into underwriting, you're going to hear crickets. It's going to be very, very quiet. And then a lot of times people go, oh, okay, this is good. They're working on getting my loan together so that I can close and get my new home. Well, sometimes that time period can take 7 to 10 days. A lot of times the buyer gets antsy or impatient and they call the loan officer every day. Have you heard anything yet? Have you heard anything yet? But just know it's going to take about 7 to 10 days for that to happen. That's why it's also crucial at this time for you not to do those fast closings where they say, well, we can close you, use our lending team, and we can get you closed in under 30 days or faster. You're not looking for a fast close. You're looking for an efficient, you're looking for where you can take your time and make sure things are done right. Because if you rush and you don't close on time, I mean, not that you rush, but you take one of those rush closings, it's in the contract that once you pass that date that you listed that you were going to close fast with, the seller is not obligated to give you an extension. They're not obligated to do an amendment to extend the contract under any means. They can just keep all of the money you put down because you made the promises that you were going to close faster. Give yourself time because I promise you, any and everything can happen during this time period. So just know that it can take 7 to 10 days. If the contract was written for 30, now you're down to, let's say it took 7 days, 23 days. Always be watching that email like a hawk. Watch it like a hawk because you make it something that fall through the cracks and go into spam. You want to know that they're asking you for something. They've given you the uh, conditional loan approval with conditions, and you need to get those conditions in, not at your leisure, not in 5 days or 6 days. Try to do it within 24 to 48 hours because time is of the essence. And then number five, you want to work with lenders who understand self-employed income. Like I was just telling you, if you work with a lender that say, "Oh, we can do you," and then they start talking about a certain, of course, I don't want to start talking for the lender in terms of what type of programs that they have, but a lot of times my self-employed income buyers don't fit into those programs. And I know that because, again, I work with a lot of self-employed income lenders that specifically understand that you guys write off a lot of stuff and you want to be able to report all of that income so that you can buy that house without having to amend your tax returns. So that's all I have for today. And one final thing I want to say is that preparation protects your deals. Now, if you're self-employed and you're buying new construction, my Texas self-employed buyer's guide is going to walk you through what to confirm before you ever step into a model home. Thank you for watching, and until next time.